Yo, yo, yo. Welcome back to the channel. I wanted to do a brief breakdown of theory that I got sent my way by Mr. Charlie Waters on Twitter. He previously was an account called Kid. I don't remember, I think it was like Kid Fast Trades was his name. And now he goes by this moniker or whatever. It doesn't really matter. But historically, he's been pretty bearish on AMC since like July. Been sharing a lot of bearish sentiment. He's had a bunch of moments where he's come in and been bullish, specifically in times based on cycle theory and stuff like that. But for the most part, been bearish. And he shared this with me. He like left Twitter for a little while, but he came back. He shared this with me. And what he's saying is that we are actually in a distribution schematic. Wyckoff distribution, and obviously we've been covering Wyckoff a lot on the channel, so I just wanted to break this down, and I also wanted to just compare it to like the previous run as well, and just talk about how distribution actually can be done based on my further research, can be done from an upside, like a downside, I'm sorry, because on the schematic you see that it has entry from the bottom and an exit to the bottom, right? But in fact, I was doing some further research and I did find that you could have distribution even if you enter. So phase A is kind of like the entry point. It doesn't matter as much in determining whether or not you're in an accumulation or distribution, which is certainly a thing. So anyway, I copied his distribution schematic that he mapped out, and he sent this yesterday. And then obviously today we had the drop. I was calling for $36 on this drop. We pretty much bottomed out there at that $36 level. And basically the way that I came to that conclusion was I did a Fibonacci retracement down here. Had these this $36 level is a 0.786. I was just saying that we could land somewhere between the $38 and $36 range, and so obviously we traded right in there the entire day Friday, but that's not relevant to the video. So basically what he's saying here, and let me get his full chart here, is that we had the buying climax here, an automatic reaction, a sell test. Oops, I forgot to mark that up here. He had it right around here. Sell test, sign of weakness in phase B, an up thrust in phase B, a last point of supply here, and the schematic hasn't played itself out yet. So this is the schematic that he's basing it off of, and I will say that it looks pretty valid. Now my lines aren't exactly on the peaks here because I did it on the daily chart originally, but you get the idea. So you have the peak of your buying climax here, your up thrust in phase B here. The last point of supply gets rejected down by the buying climax, the zone that the buying climax kind of signs in. You have your sell test, your automatic reaction, and your sign of weakness that are basically laying out here the bottom of this trading range. So I know that previously we had been talking about accumulation, and I'll show you what that looks like here. And then I'll also show you the schematic for that. I have it here. It's not that one. It's this one that we've been following historically. Oh, bit right there. And so you can see, obviously, we have the last point of supply. Support here instead of last point of supply. You have your sell test in phase B. Your sell test, your selling climax, your automatic reaction. Primary supply would be like right here. I mean, I will say it makes more sense just if you're looking at it from a fundamental like Wyckoff standpoint, you're looking at it as accumulation and distribution. And also if you're looking at the options chain and the cost of options, especially out of the money call options, how they've cheapened so much with implied volatility going down and stuff like that. If you were the composite man, it seems like the more profitable side of the trade would be to the bullish side, in my opinion. But obviously, everybody's entitled to their opinion, and that's why I'm entertaining this idea to begin with. anyway, let's bring his schematic back up. And I'll just take this off. Bring his schematic back up here. And then what I want to do is I want to compare it to the previous run, because I know that cycle theory is certainly something to be paid attention to. And look, I'll show you a couple of crazy ones that I came up with here. You can see you have this peaking. Never mind. Don't pay attention to that. We'll do a different video on that. So anyway, we have Charlie's distribution pre-June. So let's zoom in here. And we're just assuming that he's right here, right? We're going to assume here that that he's right and see what the results is, right? So you have your buying climax similarly, right? It comes off of this big bounce here. Buying climax, an automatic reaction. I would say here is a sell test. You have a sign of weakness in phase B, an upthrust in phase B, and then this is actually how you determine the top of your trading range and then the bottom of your trading range using these lines. And then you have your last point of supply would be probably somewhere around here, or and again, like, it doesn't have to be exact. I say that in all my videos, but I just want to make sure I clarify that because we always have some new viewers. By the way, if you haven't subscribed yet, make sure you subscribe and turn on your notification bell so you don't miss any of my future uploads. Also, you can watch some of my previous uploads to get an idea of what we're exactly looking for in the stock on a day-to-day basis. And you can follow me on Twitter and my Discord. We keep up with some technical analysis there for AMC stock. But anyway, yeah, so I'd say that probably we're somewhere like in this range, right? Comparatively, if you were to compare them side by side. I will say that, you know, obviously let's be honest, like, it adds a ripple to the conversation that we should be having in regards to Wyckoff and distribution versus accumulation in the stock and everything like that. I will say that historically, like, when I'm looking at, like, so we can look at this here for a second, just look at it. And then if we swap over to the accumulation schematics, and I have the one from before as well, what you'll notice is in this second move thus far, all the similar moves have been very methodical. They've been much more drawn out this time around than they were in the previous cycle, if we're calling it that, a cycle. I suppose we can at this point. So just to make it look a little bit more similar, we'll just pull these lines here. This is just for your support and resistance, basically the support levels and resistance levels in the schematic. And let me pull that schematic back up for you too, so you can see what I'm talking about. So here we had our last point of support, and then we would have had another one right here. Background off. Before we kind of lifted off here and we saw this sign of strength phase, and then you're back up, last point of support, and then blast off, right? Similar to that, you could say that you know, in a way we're doing both of the schematics justice here, right? And I know that that's not the most exciting thing to talk about, but what I will say is that I would say that this pretty much, to me, validates that obviously something's going on in the background here. Obviously institutions are involved in this thing. There's no doubt about that, to the upside or the downside, however you want to see it. And you can adjust these levels here where you see this bouncing and support. But I just thought that it would be an interesting exercise. I know a lot of people are going to watch this video and be like, why are you giving that guy a platform and blah, blah, blah. But my channel is all about exercising different ideas on the stock. I'm not scared to talk about bearish outlook. I'm not scared to say that I think that the price is going to go down, stuff like that. Trust me, I've dealt with plenty of hate or whatever from people on Twitter or whatever you want to say in regards to that. But hey, at the end of the day, it's all about being honest. And my goal is to empower people, especially in the ape community at this point. So that's what I'm trying to accomplish. And this is the best way that I see, that I know how. But to speak to the methodical nature, how it's been so much slower this time around. If we measure from the beginning of phase A to the end of phase C, the first time around in this accumulation, if this is an accumulation schematic, the first time around from March until like the beginning of May, it took 47 days to do that. And for the same thing, if you did from the cell climax, just like I did here, to the end of phase C, if this is the end of phase C, we've already done 95 days. So, what does that say? Well, 47, what's 47 times 2? 47 times 2. It couldn't be 94 days, could it? Oh, man. What are we doing here, guys? Holy shit. Yeah. Well, it seems like it might be taking like somewhere around twice as long. Oh, dude. This thing, man. All right. Well, since you guys have stuck around, maybe we'll talk about the end of day analysis. Oh, I know a lot of people are going to be like, well, why didn't you talk about that at the beginning? Well, I mean, to be honest with you, it's hard to make a video about, like, when you call some price action like this, and what are you going to do? What am I going to do? I'm going to come here. I told you. Like, that's not what it's about. I don't care about that. Man, that was funny. Oh, God. You guys don't understand. My brain is, like, fried from sitting here and doing, like, cycles for the past few hours. That's why I'm so late making this video. I really shouldn't have gotten myself involved in that. Man, that's not fun. I'm going to leave that to Astro. Let him do it. Oh, yeah. I did it in with after hours on. So what we had at the end of the day here was a little pop. I know you guys probably saw that if you were watching the price, especially in after hours. Let me add the extended hours here. All right, because you can see it a little bit more clearly. So this pop, I mean, to me, look, this looks like this is actually what sent me down my cycle theory rabbit hole, which is unfortunate for me. Oh, wait, hold on. I actually tweeted this chart out, but let me see. You gotta mess with it. Oh, no, I remember now. It's the shorter peak right here. Yeah, so what ended up happening here, and the reason that we got this pop, I believe, well, outside of it just literally being an algorithm that creates all of this, and none of this actually matters, and I'm completely wasting my time. My destiny is already set for me. It was a falling wedge, right? We had a falling wedge here. Hey, look, at least, to be a little bit more bright about it, it's just goofy to me that that this happens, but that it's like the same thing over and over again. Like, does this falling wedge not look like another falling wedge that you've seen recently? Maybe on this channel, like maybe, like I don't know, dude. Like maybe something similar. Maybe something similar has occurred in the past. I don't know, dude. Super creepy stuff. But we move on. So yeah, we had this falling wedge, and then we broke out of it. And now, we're in after hours. We're still above it. Maybe come down for a retest. Maybe the falling wedge is here. Maybe it's, further in. I don't know. So, obviously we're going to be going into next week. We're going to see what happens. But I will say that this is a statistically bullish pattern. So you could see a breakout here. Normally that breakout is measured by the distance, like you would do like this, the back of the wedge essentially. So maybe you would do it like this, to be honest with you. And then this would be like your price target. So this would kind of bring us back up to this $41, $42 level if it does confirm its breakout. I will say that another thing to note is that if you take off, well, even if you leave on, if you go to the daily chart, we do have this big nasty gap that was left over by the gap down in the morning. And you know, historically, AMC tends to fill its gaps. You can even see here. I talked about it in the other video yesterday, but here we had this gap. It ended up getting filled and immediately got rejected. But I will say that historically, it wants to fill its gaps. So this is definitely a point that you could see. Even if we do retrace down further, you could see us come back up and test at some point because it is a gap in the chart. It's just like it'll create a new like tiny liquidity zone that institutions and stuff will want to come test out. But yeah, so we do have to exercise the possibility that also that we might still be in this phase C of this this schematic, right? Because perhaps we're further exercising this, and then we're gonna see another pop up here, or you could say that we pop right up here, and then it's kind of representative of the end of phase C. Even though it looks like it's like a double bottom, basically. Look, a double bottom is a technically bullish, you know, scenario. So if we double bottom here, we pop up, and when I say double bottom, I mean from like this sort of level that's been holding as support. I will say also we do have this support here that's been very strong for us. Obviously, you see that we came down. We found support here on this trend line here. And then obviously we found it twice here. And then could this be another moment of support here? You know, totally possible. So yeah, so these are the things that I'm looking for. If you're, you know, going into next week, we're definitely going to want to hold this trend line for sure, right? You don't want to, I don't think that you really want to be breaking this trend line, because then it kind of insinuates that it's, you know, not the strongest. You could also draw like a one like this here, and then now it's acting as resistance. Oh, another interesting thing that we can check out. We did have this this bearish trend line, sorry. If you measure it from the wicks, from the very, very top of the move here in June, and you measure it down using the wicks. Hold on. Am I on the right time frame for this? Let me go zoom in here and make sure that I'm doing it right. Edit your videos, Dave. You're wasting my time. Oh god. I'm the fucking worst. All right. Sorry, I usually don't curse in my YouTube videos. But yeah, so we did have this this bearish trend line that we were kind of respecting. You see us trade across it, and then we spiked up. Then we kind of rode it down, eventually finding it as support here on the bottom. And we draw it really accurately. Yeah, you can see here. If we draw it using the top of the wicks here, we actually bounced right off of it. That's where we had that big blast on September 30th. 30th? 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 20th and 3rd? But yeah, so that's kind of the outlook. If you want to look at it from an Elliott Wave perspective, I suppose you could try that. Let's take a look and see what we think. I don't need to take that off. I need to take this off. Take this off. Take it off. So then I would say that on the smaller scale, I know you guys remember because I talked about this every day for like weeks, but we had the Elliott Wave 1, 2, 3, 4, 5 up, eventually leading us to our A, B, C down. And then we could be here in a 1, 2, 3, 4, 5 possibly. Well, no, because wave 1, wave 4 can't extend down past the top of wave 1 in Elliott Wave. So let's take a look then, see what we think. Well, it could then just be invalidating this. We might have to come back down unless this is a wave 1. Well, that would make sense though, because bear with me. That would make sense for this to be a wave 1 though, because this was the Fibonacci level that I was using I was drawing it from here, from this bottom to this top, so that's possible. And then that's where we found our support at the 786. The 786 is the second most common retracement level for an Elliott Wave 2 to find as support. So I would say that that's a valid theory. So if we do see that upside, then we could say that we're going into a wave 3 here. So then what would that look like? This would be wave 3 of wave 3. So it would have to be a pretty explosive move, I would imagine. This is an if, right? This is not me sitting here saying that this is what's going to happen, okay? That's not what I'm doing. Let's do a fib extension, see what kind of levels we could expect. Yeah, so we could do... you know, I'm sitting here, I'm being so biased because, like, you know, obviously the price action has been so, like, lately. Well, not lately, really, but, like, the past few days. But that's the funny part about all this shit, is that it's meant to make you feel like that, so you you get exhausted and you don't want to play anymore. Oh, man. Man, oh, man. So just to clarify what I'm doing here. It could be that this was a wave 1, this was a wave 2, because we've already confirmed this was a 786 retracement. Then this could be a wave 3, like a total wave 3. And then we could retrace for a wave 4 about this level, and then this could be a wave 5. That is convincing, I'd say. Pretty interesting. To think about. Let me change the color of this so it's a little bit clearer. I know there's a lot of yellow going on, and it's kind of hard to tell. I shouldn't do blue. Let me make this like thicker. Dick. Yeah. I mean, I could see it. I mean, it's totally possible. This is interesting. All right. So for me to stay on this, and then how does this align with our... It does align with the schematic as well, with the Wyckoff schematic, right? So let's just do that. I'm going to get rid of this. Get rid of the small stuff. Let's just do the big stuff, and then let's do it like Wyckoff, okay? Let's use this exercise to then figure out if it's possible that this is a part of that Wyckoff schematic, right? That's a good way, because we're cross-referencing. We're using different tools, right? We're using different things. And again, none of this is financial advice. I'm not guaranteeing any of this stuff is happening. I'm just saying that it is good for us to sit here and try and figure it out, right? So, all right. So we come back here for... I should pull up the schematic while I do it. So remember... Okay, so maybe this would make more sense. 5 for this. And then what that would look like from a Wyckoff perspective. Uh-oh. Sounds like it's going down. My toddler is giving mom a hard time. Okay. So then... This would be like that LPS phase in phase C. We have a bump up here for wave 3. Boom. And then we go above the trading range. Everybody gets euphoric because we're above like the $53 level where we got rejected from. We come back down. Test that range again for our backup, and then we lift off. It does seem like it could work out. So let's do this. Let's do this back here. You guys are like, yeah, the video is too long, bro. Don't do it. Don't do it. Just cut the video off. Just spare me. Your average watch time is going down now. Look, man, this is some crazy shit we've been doing on this channel, man. You guys gotta admit. For those of you who are still here, holy shit, what a ride it's been. Okay, before June, that's what I'm looking for. So let's add this here. All right. This is so fucking weird. Like, what has my life come to that I'm sitting here? I'm combining cycle theory with fucking what the fuck? I didn't think that this would ever happen to me. I didn't think I'd be here. I didn't. I did not sign up for this. My uncle used to have all these things on his bucket list. All right, so. All right. Sorry, I just fucking fucked it up. All right. Say all right again, Dave. Say all right again. See if I don't come through the fucking screen and smack your ass. All right. All right. So we had a follow. This would have been the from a cycle perspective. God, I can't believe I'm the similar to. What is happening? I got chills a little bit. Man, I tell you what, man, if you stayed for the end of the video, it was worth it to see this bullshit. All right, so one of the rules about Elliott Wave is that wave 3 is typically the strongest and longest wave, but it doesn't have to be, as long as it's not the shortest. Okay, so wave 3 cannot be the shortest and weakest wave, but it is most commonly the strongest and the longest wave. Oh man, I really don't like. I don't like when this sort of thing happens, guys. I really don't. I don't like it. And then we were saying that the ABC. This is absolutely just. I know a lot of people are. There's gonna be bears that are like, you're being, you're too excited because you like the stock. But you gotta admit, all the things that happened in this video so far have been kind of fucking weird, right? Just a little weird. No. Oh, all right. Let's see what our retracements were. I hate it. I hate that this is real. I really don't enjoy this. All right. Did we have a 786? We had a 786 here. Yep, that's a 786. Let's make this a little bit less visible here. This video is breaking down because I am losing faith in our markets in real time while I'm doing this chart. And I know you guys are thinking, he's a shill. He should be excited. This is good. But I just think of it like we're like living in a place where something like this can happen. I don't think of it so selfishly for a second. And then okay, so we had our 786. I'm sorry, I keep getting sidetracked. I just can't believe that I'm doing this. I know you said that already. I know I said it already. And then, well, I will say that probably you don't have, right? You don't have any sort of 786 that's happening on this smaller sort of scale here. So that could be a difference, perhaps. No, it's not different. We're going to the moon, Dave. Don't pretend like it's not already happening. But yeah, I mean, regardless, I mean, I wouldn't expect the cycle to play out exactly like it has in the past. I wouldn't expect that at all. I wouldn't expect that at all. Outside of all the things that we talked about here so far today, I really am enjoying this video, by the way, guys. This is a good video. This is actually like one of my favorite videos so far that I've done. So I'm excited. I'm glad that I waited to do this like this, because maybe it contributed to it somehow. Again, none of this is financial advice, man. Like, crazy shit. This is just the craziest shit in the world. You could say that we're below this trend line. Let's go see. Let's put it on the wicks. Make sure it's nice and comfy on there. And then, okay, so yeah, you do have a breakdown of this this bull trend that you have here. Let's see if perhaps we would have had an old bull trend that we would have been thinking about that got broken in this process. Yeah, I mean, because we are just trying to figure out where this bull trend is, right? So we're still kind of playing the guessing game with this. Let's see how we would have drawn it before. If we would have... So we would have done this one, which is kind of similar to this one that was previously drawn, right? And then like we got rejected underneath it, and everybody was like, "Oh god!" Well, we got rejected underneath this one. We were like, "Oh god, the world's ending." Okay. And then, so what if we draw one from here? Yeah, I mean, this definitely looks like, unless obviously we could establish a new trend. That's kind of the cool thing about being in a bull trend. I talk about that all the time, but is that you can establish a new trend because you're so high up and you have all these levels of support that you've gained that you can start to develop new trends. I wouldn't say that it's like I mean, even if we were to go down here to the $20 zone tomorrow, he's a shill. Definitely, Dave's a shill. You would still. He's a shill for confirmed. You would still technically have a bull trend, right? So, and again, I talk about this like from a macro perspective. You still have your Elliott Wave 1, 2, 3. And I don't know if I didn't put this video out yet, but you do still have your Elliott Wave, like your 5-wave count in the long term, and it would be, in my experience, very odd if a macro trend like this just didn't have a 5th wave. And usually 5th wave is more related to wave 1. Again, normally wave 3 is the longest and the strongest, but it is it just can't be the shortest. So like, for example, if wave 3 was like this, then and it was shorter than wave 1, you couldn't have a wave 5 that's like longer than it. Does that make sense? Because then it's not an Elliott wave count. So like you would be like fucked. You'd be like, oh, this is an Elliott wave. Like something else is happening here, which clearly it is. But we'll talk about that some other time. Anyway, yeah. So trend line. Well, let's see, because I do have like these channels that I've drawn before. Yeah, I mean, we're definitely out of this channel, like at this degree though. So you can obviously you could draw a different one and probably find another channel, because that's just how it works. Like, yeah. So I would say that this could be a bear trap based on those trend lines that we drew before. You definitely want to pretty much be holding support here at this $36 level to maintain this this trend line structure. And then yeah, be looking out for the Elliott Wave, wave 3 sort of like recovery period for AMC. Alternatively to that, you definitely want to be cementing higher lows. That's kind of the zone that we're in here, and higher highs. Like we definitely are getting into that territory as well, where if you have a lower low here, like if you break below this $34 level and you spend some time down here, you're kind of getting into that territory where you're hitting the reset button. I mean, if you could come all the way down. I mean, technically you could double bottom, right? You could double bottom here at the 28.76. but you would be resetting all of the Elliott Wave counts at that point. Once you have your bounce up, you would have to start counting a wave 1 again, and then you would have to go from there. So, I mean, we don't want to do that, right? And then also, I do want to point out here too that historically, we do not have our 786 retracement, which I'm not saying is necessary. I know a lot of people say, well, the buy button was turned off and it caused all this. Like, yeah, I get it. But you know, just from like a cycle perspective, like just say you're doing cycle theory and you say, okay, well, the Fibonacci's have to be met. We haven't had the 786 retracement. And me and Kid were actually talking about this, is that we did blow right through the 20s for AMC. And like for institutions, it is pretty key for them. Like you know, in the long term, you do want to see, you know, you want to see accumulation at these levels in order to confirm that you're ready for like another move up. And as you can see, the $20 range is one of the least traded ranges, and then especially if you're referring to it in the near term. Wait, go back up here. This is the $20 range. Okay. Especially if you're talking about it here in the near term. I mean, really, you've only had this section of the chart, which is all the way back in 2017, where you've traded in the 20s. And then you don't really have anything else, right? So because you just kind of blasted right through it on the last move up. So, and then you don't have that same, you can't qualify this part of the chart that same way, because he's a shill. He's saying we can go to the 20s. Because from $5 to $10, right? Like, well, look here, yeah, like this. So like, think of it again, like this section of the chart is like deleted from like the $20 to like whatever, and then started at March 15, this peak, and then put it here. We don't have that here, where we had this big major dip, so we haven't come down and traded in this region at all yet. We haven't found it as support. It's kind of just a blank spot in the recent history, in the recent move for AMC, right? So that's another thing to consider, you know? So this is just like a holistic approach. If you're like here trying to get like a prediction out of me for Monday or whatever I think is going to happen or whatever. I mean, look, man, I will say that this looks good. You know, this, you know, when you look at the weekly chart, this looks, you know, this still looks to me like you're just accumulating in this wave too. Like you would say maybe 1, 2, 3, right? Like, so to me, I mean, I'm not discouraged personally. I'm not changing anything about my position or anything based on anything that happened today. I mean, I freaking predicted. I said I thought it could happen. So I didn't say I thought it was gonna happen. I just said it could happen. So why would I change anything about my position? I said we could come down and test the $36, $38 range, right? So, and look, we could still go lower, like I showed you guys. If we were to come down here, you know, you still have your 885 Fibonacci level, which is a technical Fibonacci level, and you would still technically, you could submit this as support and say, hey, we're going to wave 3, and that's the $30.58 level. If you're curious, everybody's not. No. You know what, Dave? You could have just not told me that one. I know I asked you to say your numbers out loud and stuff, but that one, you could have left that one out. All right. Look, man, if you got conviction in the play, if you believe in the play long term, and you know, like I do, like if you believe that this thing has further upside to go, then you know you need to change the way that you think about dips, and maybe just, I mean, for me, I have reprogrammed my brain over the years to see them as opportunities. Yeah, it's not fun to look at your account value go down, but that's why I don't really look at my account value too much. I look more at, I look at the chart, and I just try and understand the price of the stock, and then I just make my decisions from there, based on whatever liquidity I have and stuff like that. So, yeah, so that's pretty much it. I appreciate you guys sticking around. Damn, we're up at 40 minutes again. This is the second 40-minute video. Hopefully you guys enjoyed this video. Is a total in-depth analysis, kind of fly-by-night thing. Wasn't expecting it to go this long, but hopefully you gained something from it. Hopefully you enjoyed the video. Hopefully you enjoyed listening to me talk to myself for almost an hour. And enjoy your weekend. I've been cooking up some videos in the background as well. I'm gonna, in the next week or so, I'll be releasing like a playlist that has like all of my long-term stuff that I reference to and may not fully cover in the videos. You know, I have that kind of in one place so that people can always refer to it. You know, like I can in my videos just say, hey, you know, go check this out in the playlist or whatever, so that you know, you understand what I'm talking about, and I don't have to like fully explain it every time. But yeah, so anyway, yeah, maybe we should adjust these channels, right? Maybe we should. Would you look at that? You know, I mean, if you look at it, it does seem like this line does have some significance to it. Maybe we should adjust our channel degrees, the degrees with which our channel is driven. Maybe it should be negative 165 degrees. That would be really cold if it was like that, wouldn't it? So look, check this out though. So like if you came down, you know what I'm saying? You came down here and you did this thing like you did before. Hold on, let me get my path tool. You know me, I'm used to charting on my phone, so I can't always find my tools. But you know what I'm saying? So like, look at this. So you see this move right here? What if you came down here? You broke this channel like this right here, boom, and then you just came up like that. You know what I'm saying? So like, boom, boom, boom. I know way too many people that talk like that. Yeah, of course you do. You come from New Orleans. All right. Hopefully you guys had fun watching this video. Sorry it's so long. Don't say you're sorry. Don't apologize. It's okay. All right, follow me on Twitter. Join my Discord. It's completely free to join us in the links down below. Join TradingView. I have a link down below for that as well. That's the tool I use for all these charts and stuff like that. And my referral link is there. So if you do a premium subscription, I get a kickback for it. If you don't want to do a premium subscription, everything I use in this video today is completely free to use. It's a great tool to have, and it helps you maintain that conviction. We need that conviction up in this place. And if you have if you don't have conviction, well, if you do have conviction, but it's like bearish conviction, like Charlie does towards AMC, I respect you too. So share your thoughts in a comment down below. Let me know what you think. If you watched until the end of this video and you're a bear, that's pretty impressive. I commend you, actually. And also, you leave your comment down below if you're a bull. I know most of you are. So, all right, have a good weekend. Bye.